Welcome to Trading Bell. This week on the program, we have a visitor. Yes, a visitor from Zimbabwe. And we shall be speaking to the Chief Executive Officer of the Zimbabwe Stock Exchange, and that is Justin Bgoni. I hope I pronounced it right, but he'll be telling us more whether I did it right or not. But before we get into the interview, let's take a quick look at who is Justin by taking a look at his profile. Justin is a chartered accountant with over 19 years of international experience in the financial and public sector. Justin holds, among other qualifications, a Bachelor of Accounting Science from the University of South Africa and a Master's in Applied Finance from Victoria University of Wellington in New Zealand. Some notable previous appointments include being a management consultant at McKinsey Incorporated and Chief Financial Officer at New Zealand Stock Exchange. Justin, thank you so much for joining us.
Thanks, Abby.
Welcome to Nairobi. Yeah. Welcome to Kenya.
Oh, thank you very much. You've got a beautiful country, so thank you very much. Yeah.
Thank you so much as well. And of course, the face of Zimbabwe right now is a country that seems to be coming out of turmoil.
Okay.
And it's a country that we out here believe has so much potential.
Okay, all right.
Perhaps, of course, there's the political question right now, which has, of course, had a big impact on how the country's economy has performed. But just give us a quick glimpse into what's happening right now in the country.
So at the moment, the country is stable. So the politics side, everything is working. That's working perfectly. Mm-hmm. And what the country is doing is they're calling what the country is going through what's called a transition stabilization program. Mm-hmm. So what it means is the government is going through almost a restructure to make the economy more competitive. Mm-hmm. That's what's going through at the moment.
Interesting.
Yeah.
And of course, I know Zimbabwe has one of the oldest stock exchanges in Africa.
Yeah.
And of course, for our viewers, perhaps just paint for us how is market activity right now, and what do you see in the horizon? Yeah,
so that's one of the things that most people don't know, that we actually started in 1896. And my understanding is that probably we are the second or third biggest or oldest exchange in Africa. Mm. And the market activity is pretty good for our country. Normally we do between 1 and 2 million US dollars turnover a day. Yeah. It's a bit lower at the moment for a couple of reasons, but otherwise the market is doing very well. Mm. And as the exchange itself, we have got about over 61 companies, almost the same as the Nairobi Stock Exchange. Mm-hmm. And these companies span all sort of sectors. So we're quite a diversified stock market.
All right. Yeah. And looking at this rich history, yeah. Justin, you want to believe that there's a lot of investor interest in your stock exchange. Perhaps, which are some of the key sectors back home?
So the mining is a big sector. So we've got gold, we've got platinum and other minerals as well. So the mining is important. And also agriculture as well is important. Mm-hmm. That's one of the sectors that drives the economy. We've got tourism as well. We've got Victoria Falls, we've got national parks. So that's also a big sector as well. And of course a services sector as well. So we've got a big service sector. Mm-hmm. But as far as investors are concerned, one of our challenges at the moment has become a big opportunities for investors. So in terms of energy, we've opened up the energy sector for independent power producers, and that has become an attractive investment for people who want to come to Zimbabwe.
Interesting. Yeah. And just a follow-up question. Of course, not just Zimbabwe, but a number of African stock exchanges are still yet to get to their full potential. When you perhaps contrast with what's happening in the New York Stock Exchange, you see African exchanges still have a bit of road to cover, a bit of ground to cover actually. And how significant, in your view, do you think exchanges play in terms of attracting investment and opening up regional trade?
It's very important. I think it's taken a long time for government and the public to understand the importance of the capital markets in terms of companies being able to raise money. And therefore, if companies can raise money, they can invest and create jobs. Mm. So I think traditionally, the government has looked to itself to create jobs instead of looking into the public sector. So the bigger and the stronger your capital markets is, the easier for companies to raise money and grow the economy. And if you look at it in terms of wealth creation as well, you want people to have savings when they finish at the end of their working life. And if the stock market is strong and is having strong returns, then people retire wealthy. That's why the capital markets is important.
Interesting. Yeah. And of course, Africa is one of the frontier markets right now, and there's a lot of investor interest across the various nations. That includes Central Africa, East Africa, South Africa. But which areas do you feel will be unlocking the next wave of investment?
I think what's going to unlock it, I think, more integration. So at the moment, the exchanges in Africa tends to be very small and therefore not attractive to big players in the outside world. So my feeling is that as regional exchanges, because in Africa, exchanges tend to be nationalistic. So what people say is the Zimbabwe Stock Exchange and it's only for Zimbabweans. I think that mindset is changing, especially amongst our peers. There's more integration, there's more working together, there's more harmonization of rules. So my feeling is that as more exchanges work closer together, I see an area where sooner there will be larger exchanges that are more multinational. And if that happens, they'll be more attractive to the rest of the world.
So in all this, how do you target the millennials and the fast rising middle class?
So I think it's new product lines, and it's also in terms of education. So the millennials tend to be faster moving. So when you have products that are like T+3, where the settlement happens after 3 days, for the millennials, 3 days is eternity. So as you come up with more products that are more faster settlement, that are more exciting, then I think we'll get the millennials. And also we need to educate them as well to say, look, the stock market is there for you to work with and to play with and to make money.
And in terms of the stability of the stock exchanges in Africa, I just want to pick your mind. Of course, you are a classical example of an exchange that has remained relatively stable in the wake of uncertainty. How do you manage this very tricky balance?
So what we do is, even though there's turmoil around us, we still keep the best practices. So we still run an exchange in the best way possible. I mean, it hit me when someone told me to say one of the reasons why exchanges are very popular in Africa, which is almost a sad thing when you think about it, is people know that an exchange is one of the few places in Africa where you can invest and you don't have to talk to a government official, you don't have to pay anyone, you can come in and you can invest and you can come out.
Interesting. And Justin, looking at your country, Zimbabwe, I've never been to Zimbabwe, by the way.
All right.
And I'm hoping to visit one day. It's in my bucket list.
All right.
But Justin, I just want to get your perspective as well on looking at the currency. We are seeing a lot of currency fluctuation in Zimbabwe. How is this affecting investment, the investment outlook, as well as what is the next way forward?
So I met a group of investors last week, and they told me that this is probably one of the biggest barriers in terms of investing on the Zimbabwean Stock Exchange. And it comes in two ways. I think the first one is that you are not very sure in terms of the value of the assets, because if the exchange is moving all the time, you actually don't know when and how to invest. And the second thing is actually getting your money out. The repatriation of dividends and capital has been one of the challenges. And I like what the government is doing in that regard. I am one of the things that are in favor of the introduction of the Zimbabwean dollar as a currency, because for me it leads to long-term stability. And also it makes Zimbabwe more competitive, because you can't be using the US dollar as your exchange and expect to compete against other people. The US dollar exchange, USD tends to be, United States dollar tends to be strong. So that's one of them. Then what also the government is doing is freeing up the exchange controls. So now there's an interbank market where you can, on a willing buyer, willing seller, buy foreign currency. So that makes it easier for investors to come in and to go out. And the market it just started a few months ago, but it's getting better and better, and more money is being traded on it. So what we need is, as Zimbabwe gets more competitive and the Zim dollar becomes more functional currency and people believe in its value, that's what we need. Zimbabwe needs to be just more productive in the long term.
Do you feel this will help the currency stabilize eventually?
It will, yes, it will. Because the most important thing is the currency has to be based on production. That's why when your currency is a little bit weaker, I know it's painful for most people, but what it means is whatever you're producing is more competitive, which means you can have a better economy. And so it will help.
And for the sake of our viewers who perhaps might not really have a clear background as to what has been happening to the currency, of course, I would like you to just take us Zim 101 in terms of how did we get there in the first place, and what are the lessons?
So what happened was in 2007, thereabout, there was hyperinflation, which is probably one of the highest in the world. And because of that, people lost faith completely in the Zimbabwean dollar. So what happened was there was a multi-currency introduced in the country, where people could use a basket of exchanges. But the truth of the matter is, what happened was the US dollar, United States dollar, dominated everyone else until there's only one currency. It became monocurrency. And unfortunately, during that period when we had the United States dollar as our dominant currency, we lost competitiveness, which meant that all the countries around us, we could not compete against them. And so therefore, they exported their products into us. And obviously, our industries suffered because of that. And also, when you think about it, it's not our currency. So it means, as a government, the government only could use fiscal policy. They couldn't use monetary policy because they don't have a currency to manage that. That's why the Ministry of Finance moved over into introducing a Zimbabwean dollar. And this happened this year. That's when they moved to the Zimbabwean dollar as the official currency. And
Justin, looking at the big picture, of course, Zimbabwe was a one-time very robust economy, and of course was playing in the league of the dominant economies you can think of back in time. And do you feel Zimbabwe will reclaim its lost glory?
Yeah, definitely. Definitely. So there are three reasons why I say Zimbabwe can get there. So the first one is its people. We are known for having a very high literacy rate, a very hardworking people.
I understand your literacy rate is about 80%, one of the highest human capital in Africa.
In Africa, yeah. So we have the people. And the second thing is we have the resources. We have gold, we've got platinum, so we've got minerals that can help us in terms of getting there. And then the third thing is, I feel that now we have a government that is determined to make this work. And they know what they need to do. And what needs to be done now is the hard work to get there.
Interesting. And let's take a different tangent right now. Of course, you're in Nairobi. I believe Nairobi so far is treating you and your team very well.
Yes,
And what do you make of Nairobi? Because every time we mention Kenya in the global map of things, many people see Kenya as the next powerhouse, especially in East Africa. Of course, thankfully, we have a very robust manufacturing sector and, of course, a fast-rising middle class. Perhaps your assessment of Kenya, and is it a country that you're likely to see ties with Zimbabwe in terms of partnerships and bilateral relations?
Yeah, definitely. So the way we think of Kenya, maybe we hold you in higher regard than you do, is we really think Kenya has done a lot of things well. So we look at Kenya and we say Kenya had some of our problems, which is, whenever there's elections, there comes with the turmoil and everything. But Kenya has managed to come out of those things very strong. That's what we like about Kenya. Then in terms of Kenya as well, is in terms of the diversity of its economy. Strong manufacturing, the construction that is booming now. So that's what we like about Kenya. It's diversified and does well. But the main reason why we are here is the Nairobi Stock Exchange, or Nairobi Securities Exchange, NSE, I think as we like to be called, is that they've done a good job in terms of developing the market, the capital markets, new products, attracting foreign investors. They've done much better than what we have. And that's the reason why we're here, is to benchmark ourselves against the NSE and then say to ourselves, how do we get where NSE is? And that's why for us, where we see the collaboration is going to be. What can we learn from NSE? And as African stock exchanges, we tend to be very nice to each other. So we tend to help each other very much. Because what we know is that we need to grow together as a sector. So the stronger we are, the better it is for everyone. And one thing that you notice about investors is they tend to invest in more than one country. So if the other country is not doing well, it tends to drag others. That's why we always work together.
Speaking about working together, any tangible outcomes from your visit and your talks with the NSE CEO?
The tangible discussions are happening tomorrow. I don't want to preempt it, but I see we're coming up with tangible things.
All right. Are you likely to see any cross listings?
That's the aim.
Okay.
That's the aim. Yes. That's
within the year, sometime next year.
So what we need to do is, no matter what you do, is you come up with a framework. So what you tend to do is you compare how you list in Kenya and how you list in Zimbabwe, then you find out where the notes are, where the friction is, then you work towards making that easier. That's one thing you do. Then you sell the idea to both countries. That's what we're going to do. Yes.
You're hoping for a win-win scenario.
Win-win situation. That's the beauty about cross listings. If someone leaves Zimbabwe to come cross list here, they don't leave our market. They come here, they're able to grow. Then so everyone wins. That's what we like about it. Yeah.
Top of mind, which are some of the companies you think might benefit in all this once it's written down on paper and people have signed?
Yeah, we see some of our mining companies that are capital hungry. We see that could work quite a lot. Because what you're looking for cross listings, you're looking for people that either they're looking for capital or they're looking for technical expertise. So mining will be good, agricultural companies will be good as well, because it's not just if they list here, they're able to tap into your vast network of agriculture as well. So that would work as well.
All right.
Yeah.
And perhaps as we wrap up, Justin, I just want to get your insight as well on the Africa Free Continental Trade Area.
Yeah.
How does this tie in with the activities like what you just talked about? And of course, there's that drive right now among many African presidents for Pan-Africanism.
I've been waiting for the day. I don't know about you. These borders of ours have always been felt artificial to me. So I'm glad this is happening. And you've seen what Europe has done with this. So my feeling is the first thing is that I'm hoping that the African economies grow. And when the African economies grow, it means the exchanges do well.
Yeah.
And I also see a situation where there's better harmonization in terms of listing rules, regulations, and everything. But as I said before, one of the things that I think will happen is that instead of these small individual exchanges, there will be larger regional exchanges that will be more attractive to the rest of the world and bring capital into the market.
All right.
That's how I see it doing, yeah.
And what's the big picture for Zimbabwe Stock Exchange? Where do you see ZSC in the next, say, 5-10 years?
NSC is our guide at the moment. Our strategy will be largely based on what NSC has done. So we feel that we are maybe 5 years or so or more behind NSC. Things like listing on our own exchange, new product like REITs, stuff like that. So that's where we're going to see ourselves. Just growing with the growth is where we're looking at.
Okay.
Yeah.
And what's your parting shot in terms of where you want to see the issue of corruption, bad governance? These are some of the bad ingredients to any bad system of governance in Africa.
I always thought one of the biggest problems why this happens is people don't feel that they can make a difference. So I think it's more, especially to young people, they must feel that they can make a difference, that they don't have to tolerate this, that if there's anything that they don't like, they can make noise or they can do something to stop this. Because it's their future more than ours. And we are almost halfway through. And for them, they're starting. So if we're doing things that are wrong, it's up to them to tell us. It's more of their future than ours. That's what I think, yes.
Amazing.
Amazing.
Thank you so much.
Thank you very much for hosting me.
Right.
I hope to see you in Zimbabwe.
I'll come upon your invitation.
All right, so you'll be receiving it shortly. All right.
And of course, Justin Bgoni, any particular quote you'd like to wrap up with, and you're free to say it in your native language, then you can translate it for us.
Okay, the quote that I always have is that in life what's very important is to know what you have control over and what you don't have control over. And what you don't have control over, you don't worry much about it. And you put all your effort in what you have control over. And if you do that, you tend to achieve more and you tend to be happier.
Great.
That's the quote I have.
How do I say thank you in your language?
Tatenda.
Tatenda.
All right.
Thank you.
All right. Thanks very much.
Tatenda.
All right.
We'll be speaking there to Justin Bgoni, who is the Chief Executive Officer at the Zimbabwe Stock Exchange. And he sounds quite optimistic about the shifts that their economy is making, and he is quite bullish of the future of the exchange. And they're really pegging a lot of hope on their big brother, that is the Nairobi Securities Exchange. And we shall definitely be giving you the latest once we get down to Harare sometime when Justin invites us. Time for the market analysis for this week, and joining me on the program this day is Elizabeth Wangeshi from NIC Securities. Thanks for joining us, Elizabeth.
Thank you for hosting me.
Well, the markets have been very volatile for the last few weeks.
Yes.
Perhaps let's begin by looking at the NSE 20 share index. It has been at about 2,439 points.
Yes.
And of course, this comes on the back of CBK governor saying that the economy still remains resilient despite some shocks that we continue to weather. But from your assessment, how are the markets?
I think the market, actually looking at the numbers, the market has been quite stable, I would say the last 1 week or so. We've seen a bit of foreign investors averaging about 70%. So it's on a net buying position. So we've seen a lot of interest on the key counters, Safaricom, KCB, Barclays and Cooperative, and mostly it's on a buying position. So there's that interest because, again, our market has been quite discounted for a long time, looking at where even the multiples are compared to historical multiples.
All right.
Yes.
And of course, this gives the explanation to how the index has been performing at the end of the day.
Yes, all the indexes, looking at the all share index, the 20 share index, so there's a bit of increase on that end, and it's because now there's that interest in on the buying activity.
All right.
Yeah.
And looking at the numbers, Liz, you get to see one of the stocks that has been a top gainer this week is, of course, Bamburi Cement. The stock is up by 9.57%. with a valuation price of 94 shillings. And just this week we did see Bamburi also announcing a partnership they've entered with Vivo Energy. But looking at the fundamentals of Bamburi, the construction industry hasn't been with a lot of activity, but Bamburi seems to still survive the tide.
Yes, if you look at the recent half-year numbers that they recently released, ending June 2019, we saw an increase in the profit after tax, and they benefited from a tax refund because they had capacity expansions both in Kenya and Uganda. So, but if you look at now the performance, the revenue, it was flat. The costs, definitely the costs were higher, but the strategy going forward is to contain costs and now try to just grow the revenue base because the cement industry has been contracting over the period in Kenya and also in Uganda. So there's also that now the shrinkage in the sector, now definitely now topping up to the revenues just being flat. Yeah, but overall,
sorry, carry on.
Yeah, overall, the price at 90 something is definitely attractive. It's never been at that range, so the valuation still portrays there's an upside potential. It's just now that the story, the market and the environment is not favoring them.
I like your explanation, Liz, and you're saying there's an upside potential at a time when we're also seeing a lot of interests, especially in the affordable housing campaign by the government, which seems to be slowly gaining momentum.
Yes.
Is this likely to spur demand?
It is definitely, but at a slower pace. With the big four agenda being housing, definitely now Bamburi Cement would benefit from that.
All right.
Yes.
And Liz, let's shift gears a bit right now and take a look at our top losers for this week. We have Umeme Limited, of course, there's also BOC Kenya, Express Kenya, and East African Cables. Liz, I know East African Cables continues to be a very interesting stock.
Yes.
But just briefly touching on East Africa Cables, perhaps what is the company doing right? Because we are seeing they're slowly bouncing back to profitability.
Yes, we recently saw their recent debt restructuring program, which will now help them in terms of reducing the interest payments over the period. And also now it will free up a bit of their cash flows now into investing into helping in terms of their working capital. So overall, we'd expect to see their productivity from the plants to increase. And looking at even the market, though it's very competitive, we feel that East Africa Cable has quite a bit of a market share in the industry. So with the regional expansion also, it's a plus for them. So give it a bit, 2-3 years, and then we'll definitely see a change in it. Yes.
And Liz, I don't know if this week you followed the CBK governor in terms of his sentiments around what's happening in the economy and of course globally. But let's touch on a very interesting stock. This is Mumias Sugar.
Yes.
This stock was suspended this week from trading at the Nairobi Securities Exchange. And of course, this is premised on the fact that they were placed under receivership by Kenya Commercial Bank, KCB. And one of the reasons was that they have mounting debt.
Oh, debt, yes.
Is it still a viable company?
Well, definitely. Right now, you cannot trade because it's suspended. So that now leaves all the shareholders who've been holding onto the stock now just to wait for the information. But looking at the history of where where the challenges began is more on corporate governance, the debt. If you look at what they've been doing, the production, it's at zero. So the debt also, it's a big challenge that they've been having. So it definitely requires a bit of task, maybe support from the government in terms of just adding more capital and sort of like helping them to clear off. But as it is now, even for the shareholders who had it, they are trading more on a speculative basis, not on a fundamental or on a positive story or the strategy. So it was more on speculation. So there needs a lot to be done on the company.
Do you think what can get Mumias out of where it is, will it require a bailout, or is just a question of selling off this company?
It will. There are many strategies that you can do to a falling company. You can look for a private investor, maybe do a privatization. Government can bail them out. Just maybe look for a private investor, because the sugar industry is quite wide, and it's something that all the households are probably using. So it's quite a key commodity that we need. So should they get any assistance, because there are many avenues that they can get the funding from. Not just a question from the government.
Interesting.
Yeah.
Thank you so much, Elizabeth Wangeshi from NIC Securities.
Thank you.
Just giving us perspective into how the markets have been this week. Let's take a quick look at Markets 101 for this week. Well, time now for my favorite segment, and that is Question on the Street. Today we're getting our question from our social media platforms, and our question today is from Annette, who is asking, what is the difference between swing trading and day trading? Perhaps, Liz, what does this mean for the traders?
Okay. For day trading, it's a strategy where the traders can purchase or sell a security and close the position within that day, ensuring that they're making a profit. The swing trading is where a trader normally uses a strategy where they can, say, close the deal in 2 or 3 or more days, ensuring that they're making a profit. So it's just a matter of the difference in time.
Well, thank you so much, Liz, for giving us your very deep answers on this particular question, and we encourage you to continue engaging with us on our social media platforms. For now, we want to take you down memory lane, and this is Historical Fact for this week. Well, that brings us to the end of the program for today. Thank you for your valid company, and we do hope that you've been able to learn a thing or two, especially from markets analysis. Well, it's time for us to pave the way and give you time to relax as you enjoy your weekend. Liz, perhaps you do still have the old notes. We need to go spend them.
Most definitely.
All right. So that's where we leave it at on the program this week. My name is Agina. Keep engaging with us on our social media platforms appearing at the bottom of the screen. And you can also engage me at Agina Abi. And of course, keep it locked on KTN News. We need to spend those old notes now.